bring in New Age Wealth Advisors founder Todd Gordon. Todd, man, it's been an amazing ride from 160 all the way down to 8. We've been talking about delinquency risk this entire time. I mean, how much has the stock priced in the environment we now find ourselves in?
Hey, Carl, I think they've priced in quite a bit. And, these delinquency rates are moving higher. They are concerning. The Affirm platform will come in and say that, there's no APR on this. But there was a report out that 70% will wind up paying late fees. And obviously with the macro headwinds, increasing interest rates, less discretionary income, those fees that people are paying, I think, are going to continue to mount. Defaults will come in. I'm skeptical on the product right now.
Yeah, I mean, it also sort of belies the pattern we've been getting lately, which is you get a bounce on layoff news. Do you think there are other dynamics weighing on it? Not just the guidance, for example, which is obvious, but the reliance, say, on exclusivity, whether that's a Peloton or an Amazon contract?
Yeah, exactly. Yeah, I listened to the conference call, Carl, and they had mentioned Peloton. They talked about this gross volume bookings, which had pretty significant growth, but without Peloton, they had come off. So they can't rely on that. They do have a partnership with Amazon and Shopify, so they have access to 60% of the online e-commerce business out there. So there is hope for it. Again, I just am concerned about the macro headwinds. U.S. credit card debt, we just learned last week, went up to $930 billion, new all-time high. So, I'm concerned. I'm not going to write the stock off. It's a new idea. From a technical point of view, it failed on the breakout. The 200-day was at about 20.5. There's a downtrend line. If we can get up to 21, maybe the story will come back. But I'm cautious right now.
Todd, let's look at Robinhood. The stock is trading down this morning after initial post-earnings pop. The company did miss on the top and bottom lines, but investors did give the company the benefit of the doubt after an earnings hit that was in part due to a $57 million trading error in December, plus management showing a willingness to tighten the belt, as many others. The co-founders, they're canceling nearly $500 million worth of their own stock-based compensation. Engagement levels, though, they remain low. The service losing nearly 1 million monthly active users last quarter. And Todd, my question here, are fintech products, buy now, pay later, commission-free trading, is that becoming commoditized? And, where should Robinhood be valued, like a tech company or like a brokerage?
More like a brokerage, and I certainly hope people aren't YOLOing Affirm payments to trade in Robinhood. That's a public disclosure. Listen, I run a retail, as well as a money management business, I run a retail trading advisory membership business, and look, I have to say, nobody who takes their trading or investing on the retail side seriously is in Robinhood, right? I think there's a general distrust from large traders and investors. They have a PR problem right now. CEO Vlad Tenev, I think he's the new age Mark Zuckerberg after the 2016 election. So we have this, then SBF, Bankman-Fried is tied up in 7% of the business. So they have a PR issue. And JP Morgan came out with a report that I found interesting, Deirdre. It said, even in up and down markets, there's significant wealth destruction happening with their customers who I just don't think are properly trained. Their monthly active users, as you mentioned, they dropped to about 17 million. There were 17 million in 21. Now they're down to about 11 million. So they're not keeping the retention. On the good side, though, we are sort of rotating back into growth.
Right.
Those acronyms YOLO and hodling and FOMO are coming back in. So maybe we'll get some resurgence. And plus, that crypto is a big part of the platform.
That's on the positive side?
And crypto, that's on the...
Okay,
well, it's a good,
all right,
I know.
We're just talking about Affirm, so I don't know. Actually, let's look ahead also to PayPal. That company is expected to report results in line with guidance, with the streets worried about a spending slowdown. Mizuho lowered the price target yesterday, saying after comparing PayPal's traffic to Amazon's retail revenue, PayPal's deceleration with key merchants could be because of a broader e-commerce slump. And given that we're hearing so much about a slowdown in consumer activity in December and, consumer credit you were just mentioning, what do you expect from PayPal?
Yeah, John, I'm a little less, I'm more rosy, less dire on PayPal. I'm interested in this one. I've owned it. I don't own it now. They're looking at $1.20 EPS. This time last year was $1.11. I think they face the same macro headwinds, high inflation, low discretionary spending. They do face some razor thin margins, but I do like the way the company's positioned. I would actually be interested in buying a pullback to about 76 for my growth portfolio if we can get a little bit of a sell-off after the earnings report. So I'm encouraged by PayPal. I like the way the company's positioned.
Okay. Todd, thank you.
We'll keep our eye this morning on Lyft, reporting after the bell. Of course, that follows Uber, which called its recent earnings its strongest quarter ever, got really good response from the street. After the break, is Wall Street's frozen IPO market beginning to thaw? Some companies trying to use this rally to raise some cash. We'll look at some of the newest